ASML just released their latest quarterly figures, a very good quarter, good guidance as well, good commentary on the industry, and that's why not only ASML but all the other equipment makers are up at the moment. KLA, Applied Materials, Lam Research, and even Micron, because they did touch a little bit on the memory and logic side of things. So right now, the time of making this video, stock is up 5 to 6%, really depending when you're watching this. On the European market, the stock is up 8%. Of course, ASML, just like all the other equipment makers, did struggle in the last year or so, but then if you zoom out a little bit, over the last 5 years, for example, because then you get a better view of the big picture, stock is up quite significantly. Now, of course, with a company like ASML, it was previously, let's call it, expensive, but since the stock has been struggling since 2024 was not the strongest year, especially not compared to a couple of years beforehand, we can see now that from a pricing perspective, forward PE, EV to EBITDA, price to sales below the 5-year mean. Price to free cash flow, that's in the last 12 months, is a bit higher, but as you will see, this quarter was actually quite a good quarter when it comes to free cash flow. So let's dive into this report. If you enjoy this type of videos, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's first start with a major overview here by Consensus Gurus. As you can see, a beat across the board for a quarter, for guidance Q1 and for the fiscal year 2025 as well. You can actually see that revenue beat quite comfortably, 2.7%. Even for margins, this was an excellent quarter for ASML. If you look at operating cash flow, huge beat there by 160.8%. I'll explain in a second why. So this is the overview for this quarter compared to Q3 and then fiscal year 23, fiscal year 24. We can see one of the main reasons why net sales came in better than expected. That's because of the installed base management sales that came in at $2.1 billion, which is higher than what they expected. New lithography system sales also came in at 119. They said that, well, gross margins and net sales came in better than expected. This was primarily driven by additional upgrades. They also recognized revenue on 2 high-NA EUV systems. They shipped a third high-NA EUV system to a customer in the fourth quarter. So they said something the last 2-3 weeks of the quarter was, well, when a lot of cash came in. So we see also those numbers beating their own expectations. Net bookings came in also higher than expected. They said that backlog currently sits at 36 billion euros. Now, with regards to order bookings, they will stop providing order bookings after this year, but they will still provide us with a yearly backlog number, because they do say that net bookings, as you can see right here, this does not include the latest number, because as you can see, the latest number is this one right here, but you can see that net bookings does not always represent what really happens. It has been lumpy before. Yes, it's true that during the pandemic and all of that, well, there were quite a lot of orders. So yes, it's true, it went up and up and up and up. But all in all, it is quite a lumpy metric to look at. And so that's why they will stop providing order bookings, but they will still provide us with a yearly backlog, which in my opinion is quite okay. Switching to net sales system breakdown, Q4 compared to Q3. Here we can see that the end use is about the same, right? 39% memory, 61% logic. Previously that was 36-64. But then when we look at region, and this is something we've spoken about in the previous videos, and I said, look, management told us China is not going to stay close to 50% of the business, which is one of the reasons why, well, the market was skeptical, because, well, high exposure to China, restrictions and all of that, that's not good for business. But look at what happened this quarter. China went from 47% to now 27%, and it's not even the biggest region anymore. No, it's actually United States right now at 28%. South Korea went from 15% to now 25%. Japan at 10%, previously at 2%. So definitely we're seeing a shift, a more balanced view, I would say, which of course is much better. Then with regards to total net sales by end use, we can see this is definitely bullish for SK Hynix, Samsung and Micron. We can see that memory continues to grow quite nicely. Logic for the year has slowed down a little bit. Installed base management did grow year on year. Should expect to continue that in 2025. And so as you can see, free cash flow for the quarter compared to the last couple of quarters, well, huge difference. Then as for outlook, in Q1 they expect total net sales between 7.5 and 8 billion euros, and here as well a strong install base management sales number, 2.1 billion euros, gross margin 52 to 53%, and then for the full year total net sales between 30 to 35 billion euros with gross margin 51 to 53%, which is a bit lower than Q1, but they did say that while gross margin in the first half will be better than the second half. They also said that AI is a clear driver, creating a shift in the market, a shift towards more advanced technologies, which is why they're thinking that they're going to see continued momentum across the board. Memory will remain strong, logic will grow, which is probably why we're seeing a name like Micron react quite positively before the market opens. With regards to China, they're going to go back to a normal ratio, not the 47-50% ratio that we've seen previously. This was also because, well, they were still working on that backlog that was created back in 2022, which again, if you follow the company, you knew what was going on and you knew that this was not going to continue. It just wasn't possible. So again, good to know. As for the exports controls, the rules from the United States and even the Dutch government, they say that is reflected in guidance, which definitely is a positive thing to hear. Now, with regards to the long-term guidance that they provided during the investor day, I believe back in November, they reiterated it. So 2030 revenue between 44 to 60 billion euros and gross margins between 56 to 60%. And so right now, what do we get? Well, we get a stock that is currently going to probably open just at the 20-day moving average and just above the 50-day one. It's going to be a big green candle. The week didn't start great, right, for the semiconductor companies, the semiconductor industry, because of, well, DeepSeek and the fears that, oh, spending will come down, it's destroying American companies, blah, blah, blah. But it does seem that we are, well, going to experience a nice little rebound. Now, on the topic of DeepSeek, we actually finally have some people coming out and, well, speak about it. By the way, Alibaba came out with their own model, beating DeepSeek and Meta. Alibaba stock went up as well. So there is that. Maybe I'll do a separate Alibaba video. But we also have here OpenAI accuses China's DeepSeek of using its model for training. Oh, surprise, surprise. It's exactly what we said in the last couple of videos. OpenAI found evidence that Chinese AI startup DeepSeek used its proprietary models to train its own open source model. The company says it detected signs of distillation, a technique where developers use outputs from larger models to improve smaller ones, allowing them to achieve similar results at a lower cost. OpenAI declined to provide further details, but emphasized that its terms prohibit copying its services or using outputs to develop competing models. Interesting. I wonder who talked about AI distillation in the last couple of days. Well, this guy. We talked about this in various videos throughout the week. Then we have Palmer Luckey coming out and saying DeepSeek is legitimately impressive, but the level of hysteria is an indictment of so many. The $5 million number is bogus. It is pushed by a Chinese hedge fund to slow investment in American AI startups, service their own shorts against American titans like Nvidia, and hide sanction evasion. America is a fertile bed of psyops like this because our media apparatus hates our technology companies and wants to see President Trump fail. We have so many useful idiots uncritically reporting Chinese propaganda as fact because on some level they want it to be true. They love seeing hundreds of billions of dollars wiped off the market cap of our largest companies. I mean, let's just leave it at that because on this channel, we know what we've spoken about in the last couple of days and especially in the recent live stream. So all in all, ASML, great quarter, good guidance, good commentary, good for the equipment makers, good for Micron as well. So a good day. Good day on Wednesday because Wednesday is a pretty big day when it comes to earnings report. So I'll see you all later today for Tesla and all the others. If you enjoy this type of videos, hit all the buttons and I'll see you all in the next one. Bye bye.